Car repossessions are at an all-time high in American history. Are Americans buying cars they can't afford? If you think a 72-month auto loan is a long time, banks are starting to offer 96-month auto loan terms, and people are taking them like they're going out of style. And people are buying cars they just can't afford. Loan terms are not the only problem that happened. A lot of people don't want to talk about the fact that in 2021 and 2022, we saw a huge spike in the prices of used cars due to the chip shortage, as they like to call it, okay? The chip shortage caused a lot of these car prices to skyrocket, and people did in fact need to buy cars, or maybe they didn't. Maybe it was the stimulus money that was motivating people to buy cars because they thought this money was gonna never end. Nonetheless, we need to talk about the do's and the don'ts of when you're going to purchase a car, how much car you can truly afford, and how to potentially stop the repo man. According to Edmunds, the average monthly payment for new vehicles hit a record high of $730 in Q1 of 2023. That's just in Q1. Okay, compared to $656 a month in Q1 of 2022. And as these prices continue to rise, a lot of people are paying over $1,000 a month for a new car. That is insane. So you mean to tell me that people that are driving Hondas and Toyotas are paying over $1,000 a month? I find it to be almost unbelievable, but with interest rates as they are, I mean, what is believable at this time? Welcome back to the channel. I'm Mike the Credit Guy, and I created the most advanced DIY credit management system in the industry. Our system allows you to take control of your credit, creating custom Metro to attack letters every single round, never using templates, for only $55.99 a month. Link is always going to be in the description, and let's get into this video. When people go buy a car, they never think about the additional cost that it takes to actually own this car that they want to buy. They don't think about how much gas are they going to spend on running that car every day, because guess what? You need gas for it to run, right? Then you need car insurance. Based on the type of car you're gonna buy, your age, and your driving record, that can potentially hurt you in the long run if you don't really know how much it's gonna cost with insurance. So you need that extra cushion to help you when you're going to purchase a car. So there is something called the 24-10 rule. This is something that you may not have heard about before, but I'm gonna break it down to you so you can really see how much car you can truly afford. The 20 stands for 20% down payment. That's right, ladies and gentlemen, I said it. You need to be making a 20% down payment on a new car or a used car, whatever it may be. That's going to help you. And a lot of people want to be out there on social media saying, oh, you know, I don't need to make a down payment. I haven't had to ever make a down payment. Or my favorite, down payments are illegal. You should never have to make a down payment. That's illegal. Guess what? It's not. Stop lying, people, okay? Making down payments on vehicles are not illegal. So let's just go ahead and throw that one in the basura where it belongs, okay? So 20% is very important. You want to not have any negative equity in the vehicle you're going to purchase, because if you purchase a brand new car and you drive it off the lot, you're going to lose 15% of the value of that car the moment you drive it off the lot. The 4 stands for a 4-year loan term. I know that sounds crazy, right? Everyone's preaching 52, 72, 96-month loan terms. That is insane. If you can manage to do a 4-year term and pay off that car in those 4 years, that's gonna be spectacular, and you're gonna have more of your money going towards the actual principal of your loan, because guess what? Interest rates are still at an all-time high. I think I said interest rates completely wrong, but there you have it, okay? Interest rates are still at an all-time high. They're ranging from 6% all the way up to 9%, depending on what your credit score is. And let's be honest, a lot of us know that some of us with bad credit out there are paying way more than 9 and 8% interest rates. So you want that term to be shorter so you can pay more towards your principal of your loan. If you haven't already, you need to smash that like button. And don't forget, last part's the most important. Now don't forget, there's a 10. So what does the 10 stand for? The 10 stands for 10% of your income. That's right, I said 10% of your income. So let's break down how much car you can afford with a 10% income. So with the 24-10 rule, if you make $50,000 a year, you can only afford a car at the value of $16,000. That's right, ladies and gentlemen, I said it. A lot of us are way past that. Let's be honest with each other, okay? You're like, $16,000, what am I gonna buy with that? Maybe we need to stop looking at brand new cars and start looking at used cars. And listen, I understand that the price of cars is not cheap, but we have to be realistic when we're shopping for cars. If you can stick to that budget at making $50,000 a year, then you can target a $300 a month payment, leaving you more money for gas and car insurance because you're gonna need it. Now, if you're making $80,000 a year, then you can responsibly afford a $28,000 car, still keeping you within that 10% of your income range. Now let's climb the ladder for our ballers out there, okay? If you're making $125,000 a year, then you can comfortably afford a car that is $45,000 to $50,000. I know that's crazy, right? You're making all this money and you think you should drive a nicer car than $50,000. Now for all of our people out there that are like, I'm definitely making more than 125, you're a baller, you're making over $200,000 a year, then you can comfortably afford a $70,000 vehicle. Now I know you're probably sitting there like, what do you mean? I should be able to afford a Ferrari or a Lamborghini. Nah, bruh, stay within that 10% of your income to keep yourself safe. Now imagine if you made over $200,000 a year and you stayed way below that $70,000 mark for the value of a car, then you can go all the way down to $50,000, maybe even push it lower to $40,000. You'll have a lower car payment. You can comfortably afford your car insurance, the gas, any maintenance for your vehicle, and you can actually enjoy life. Go out to eat, go on a vacation, put that money towards your savings, your retirement. These are the things that Americans don't think about, and this is why it's putting way more stress on families, and the repo man is out to get everybody. Now listen, if it were up to Dave Ramsey, you would not have a car payment. You should not purchase a car unless you can pay for it in cash. That is the Dave Ramsey method. But who's gonna listen to a guy who's being sued by his followers for $150 million? Not me, but it is kind of realistic if you think about it. If you could truly afford to buy a car in cash, why would you not do that instead of throwing all that money away doing a financing deal, right? But at the end of the day, we have to realize that more than 25% of Americans have less than $2,000 in their savings account. More than 14% of Americans don't even have $700 in their savings account in 2023. Now that we got that all out of the way and you truly understand what the 24-10 rule means, let's talk about possibility of defaulting. A lot of times what I see on credit reports is a person is going through a financial hardship, and yes, it's like the toughest time in your life. But up to this moment, when you hit this financial hardship, your payments were all on time. What you need to do in that situation, don't panic. Reach out to your lender and talk to them about the situation. You can potentially move some of those payments towards the end of the loan, extending the loan a little bit longer, giving you more time to get yourself back on track. Because if you get a late payment and then you try to call a lender, it's not going to work in your favor. Oftentimes what I see on credit reports is people will wait too long to communicate with the lender. At this point, they've got already 3 to 4 months of late payments. They should have already been repossessed, and the lender still hasn't repossessed them, but yet you still did not communicate with the lender. Once you've gotten to that point, nobody can fix that situation with you in credit repair. Those late payments are going to be a nightmare and almost impossible to reverse. And this is why it's important. Don't let it get to that point. Communicate with your lender. Now, if you decide that you want to do a voluntary repossession or they come and take it in the middle of the night, neither way matters. Both are repossessions and they both hold the same weight on your credit report. So it's important to understand, even if you turn it in, it doesn't matter. It's still going to be a repo, which is going to tank your credit score and is technically a charge-off. I'm going to say it again. Make sure that you communicate with your lender, because a lot of these companies still have COVID relief programs or financial relief programs. This is very important. Don't let it get to a late payment. Communicate with your lender and you'll be in a better position, because at the end of the day, what people don't understand is the lending company does not want you to default, because they may not get their money if you default, right? If you default and they have to repo the car, then they're going to have to sell it for whatever they can at an auction. And guess what? Cars aren't moving in auctions right now, and you'll still be responsible for the deficiency of that loan. So if they sold the car at auction for $20,000 and the car was loaned out for $40,000, guess what? You're still on the hook for that remaining $20,000, and it's still going to be on your credit report, crushing your credit score. So talk to your lender. Whatever you do not let it default if you can at all possible. So I hope that gave you a better understanding of how much car you can truly afford. We went over the 24-10 rule, and listen, if you can get below that 10% and maybe hit 8%, you're going to be in a better position enjoying life and all the fruitfulness of all your hard work, okay? Because that's what it's really about, right? Now, if you have anything you want me to talk about specifically, maybe about cars, best place to buy cars, like best credit unions for auto loans, maybe best manufacturers for auto loans, drop it in the comments section, because it's all about you, our subscribers. I cannot do it without you. This is why we do it every day. So don't be afraid to drop something in the comments, maybe some emojis, get it going out there so we can get this video out to way more people. And please, make sure to watch the next 2 videos, because they are recommended by YouTube. And don't forget, subscribe to increase your credit score.